Sue, this is a bank that's really been struggling to recover from just a string of scandals and losses. So what does the strategy look like?
Well, the interim strategy, they're going to put out their turnaround strategy at the end of the month, October 27th. We do know that the CEO has been working very hard to ease investor and staff confidence in the interim, putting out this second end-of-week memo in 2 weeks as the stock fell to a new low and default swaps rose. The CEO reassuring staff the bank has a strong capital base and liquidity position. He also told the staff he plans to send them regular updates until they come out with this formal strategic plan on October 27th. Now, Kerner was named CEO in late July. He's had to deal with market speculation, banker exits, and these capital doubts as he tries to turn things around. Clearly, the turbulent markets of late have not helped as to the questions about rising default swaps. Last week, the cost of Credit Suisse, or I should say the cost of insuring Credit Suisse's bonds against default, climbed about 15%. That's to levels not seen since 2009. Again, that was as the stock hit a fresh low. The bank's market cap dropped to around 10 billion Swiss francs. That's just over 10 billion US dollars, meaning any share sale would be highly dilutive to long-time holders.
So what are we hearing from the analyst community at this point?
Well, there's a lot of talk again about this crisis of confidence. Analysts at KBW are the latest to compare the crisis of confidence we're now seeing with Credit Suisse to that with Deutsche Bank some 6 years ago, although they point out there are some very strategic difference between those two situations. But the German bank back then was facing broad questions about its strategy at that time. Now, Bloomberg has reported the bank is exploring deals to sell its securitized product trading unit, is weighing the sale of its Latin American wealth management operations minus the Brazil unit, and it's also considering reviving the first Boston brand name, which some consider to be very strong. The bank has confirmed they're considering these options as of last week, but KBW again saying the bank still may need to raise about additional $4 billion in capital after selling off some of these assets, and that's to fund the restructuring. But a lot of anticipation as to what that restructuring plan will be. Again, October 27th is the date being given, and that's a very quick time frame given that the new CEO took over in July. Back to you.